Markets now still up almost 300 points for the Sensex. It has been a fabulous opening to trade. Two gentlemen join in. Nirmal Jain of IIFL and Vibhav Kapoor also joins in to talk about the markets and what they've made of the all-time highs and of course the big fall in crude prices. Vibhav, I'm going to start off with you. We've seen a huge opening to the market today. What's the sense you're getting about how the year-end will shape up? Do you see a fresh leg of this rally purely because of how crude is shaped up?
Yeah, I think that's definitely a big positive. And it also means that not only today oil prices have fallen, but I think they're going to stay pretty low and the downtrend is going to continue for quite some time to come. And that's obviously a big positive for an economy like India. And this is definitely going to give some new fillip to the market, which we can see today as it's opened so strong. Also, this probably opens up a little chance of a rate cut sooner than we had been talking about earlier. Because the RBI should probably now be looking at the fact that, inflation is not going to go up so quickly, at least the oil-related inflation and the secondary benefits that it will have. And that could lead to a rate cut sooner than what the market had been expecting, and that would definitely be a big positive.
What is your own expectation on from the policy on December 2nd, and how is the market poised? Will a lack of a rate cut be really seen as a negative because it perhaps just postpones it by one more policy?
Well, to be honest, previously we had not been expecting a rate cut before April. My view was that the RBI would like to see the budget, it would like to see how inflation is behaving for the next 2-3 months, and then take a call, say, in the April policy. But with this development happening overnight, as I said, the rate cut could come earlier, and I think there are at least some chances now that you could see a rate cut on the 2nd of December. If the rate cut doesn't happen, I don't think it's going to be a big negative. Probably you might see a very mild reaction in the market, but the hope is always now going to be there that you are going to have a series of rate cuts sooner than you had expected earlier. So I don't think it's going to really, cause panic in the market.
We are expecting, a big boost in the macros, both in the form of inflation and the lower import bill, Vibhav. How much do you think the range of this market will now move higher to factor in the positive macro trends?
I think in the immediate term, say let's for December, we would be looking at a possibility of something like 87.50 on the upper side. And then, of course, one would have to look at how things develop later on as the budget approaches. One of the bigger advantages which today the market has is not only the Indian situation, which obviously is benefiting from this, but the fact that the global markets are really conducive for equity. You have very low interest rates everywhere. US yields are still at 2.2%, showing no signs of going up. The US economy is doing moderately well, and there is a lot of liquidity being infused by Japan and probably Europe, and now China is cutting interest rates. So it's really an ideal situation for equity as a whole globally, and more so for India, obviously.
Okay, now what is your sectoral mix, Vibhav? With the bond prices likely to give a big fillip to public sector bank balance sheets. I was just checking, the low was in August of about 98 rupees. Today the 10-year is at 102 rupees, almost 101.96. So, and this is still at an 8.1 kind of yield for the 10-year. If we are looking at a fairly decent rate cut in the months to come, what is the 10-year yield you're looking at, say June or 9 months down the line? And therefore, where do public sector banks or NBFCs stand in your portfolio?
Yeah, I think we would be looking at, say, a 10-year yield of about 7.5% over the next 9 to 12 months, which definitely means a big positive for PSU banks particularly. But having said that, of course, that's going to help them temporarily, or let's say over 1 or 2 quarters as they book profits on their bond portfolios, and therefore will set off some of the increase in NPAs and restructured assets that they're going to have, because they can provide more for them through the profit they have in the bond portfolio. But as I said, having said that, the overall structural issues for the PSU banks obviously will still remain, and these obviously relate to the asset quality as well as the requirement of capital over the next 2-3 years. So I think you could have some improvement in PSU bank stocks, but you won't probably have big bull market in these stocks unless and until these two issues begin to get resolved.
Okay. In fact, this morning, the bank Nifty should just come up for you. There's a huge surge that we've seen. Remember, Rajat Bose was telling us about 18,170. It's gone well past that. It's closer to 18,400 now. So fresh high is what we've seen on the bank Nifty.
18,170, he said, was the previous high. And once that gets crossed,
so that's a level to watch. And now we've gone well past that. And look at the stocks: Bank of Baroda, PNB, IndusInd Bank, ICICI Bank. In fact, names like HDFC Bank, IndusInd Bank and Federal Bank have hit fresh highs in trade today. So those are stocks to watch. But Vibhav, you were talking about PSUs. What about private banks? Would it still be a good time to invest into some of these names despite the run-up that we've seen? And if yes, what would you look at in private?
Well, the private sector banks are anyway doing well, both in terms of their performance fundamentally as well as in terms of stock prices. They've really been doing exceedingly well. The bond yield gains will of course add a little bit to their profitability, and it will help them a little bit. But again, that doesn't change the structure. But their structure is anyway good. I mean, their business is doing well, and if the economy picks up, then obviously, their growth rates are going to go up further. So I think private sector banks by and large are buy and hold stocks at this point of time. Some of them may look expensive, and therefore you may have corrections from time to time. But if you're investing with a 12 to 24 months time frame, I think they still look to be pretty good.
What's a 100 rupee split across sectors or across Nifty stocks for you now?
A lot of that has to be in the cyclicals. There's no doubt about that, and that I think has been our position for a long time. Banks, the financial, let's say, banks, private sector banks, PSUs, NBFCs should occupy a fairly reasonable proportion, maybe 25% of your portfolio. And then you have the automobiles, things like cement, which can benefit from an uptick in the economy, maybe some engineering. Should occupy another maybe 30-35%. So you would probably have at least 60 to maybe 70% in cyclicals, and spread out the balance 20-30% in IT, which still continues to look pretty good, and also maybe in some of the FMCG stocks, or the consumers rather.
Okay. You spoke about levels of 87.50 that one could see in the course of the next couple of months. But what about the base for this market, Vibhav? How much has it moved up by?
I think the base is roughly about, I'd say, 8,000 for the time being. And that's, of course, just because of the fact that when markets go up like this, you can get some corrections, 10% corrections at any point of time. So I think 8,000 would be a reasonably safe base given the current conditions.
Okay. Stay on, Vibhav. We have Nirmal Jain of IIFL also joining in. Nirmal, it's a 300 gun salute from the Sensex, 305 up at this point in time, so 28,750, and the Nifty is at almost 8,590. This is what a near 40% year-to-date gain. What is this index looking like to you as they stay at all-time highs? Is there still much more juice left over a 12-month period?
See, we are in a bull market, and in a bull market, pendulum swings from the pessimism to exuberance and optimism. So I think we are coming to a level where valuations are already reasonable now, but a bull market can take it further higher. It's very difficult to guess how much higher, but even at these levels, I think one should hold on. I mean, whether you increase your allocation to equity or not is a difficult question to answer, but at least markets can rise. They may not rise as much as they've risen in the last few months, and not at the same pace. But still, I would say that valuations are fair now. They are not attractive. They are not cheap. they're fair, and markets are looking good.
Okay. And Nirmal, hi, morning. Between three of these pockets, or among three of these pockets that benefit from falling crude prices, which one looks like a lucrative option now? OMCs, paint companies, tire companies, would you allocate fresh money to either of these pockets?
I think paints and tire companies will definitely benefit, and in fact, in case of tire, rubber prices have been low for quite some time. So I would definitely allocate more money to these sectors. Having said this, many paints companies are already quoting at a rich valuation, but still I would say that they do benefit from this. But there's an indirect benefit which, see, this brings down inflation, which, will actually result in interest rates coming down. And the rate cut will be imminent, whether it happens this month or a couple of months later. So this will also benefit not only banks, but all other sectors where the debt is high and interest cost is high, like capital goods or infrastructure and all those. So it will have a broader impact on the economy and the market.
Okay, Vibhav, we have seen the big indices, Sensex and Nifty, gain about 40%, but now the mid-cap index has actually caught up. So do you think that from here on, there is still more gains in the mid-cap than in the heavies?
I think you have to divide the mid-caps by sectors, of course, and some of them will definitely gain. As a whole, the mid-cap start to really outperform in a big way when the economy really starts to improve. We haven't seen any signs of that so far. So I think once the market senses that the economy is really starting to improve in a very big, dramatic way, that's the time when you will have, big outperformance from the mid-caps.
All right. We'll leave it at that. Vibhav, thank you very much for joining us. Nirmal, actually the same question to you. You think from here on, there is still a bigger outperformance in the mid-caps, or like Vibhav, you think it has run up a lot, you would rather wait for recovery?
In case of mid-cap, you can't make a statement which holds true for, so when you talk about mid-cap, you're talking about 500 stocks. So there are some stocks where value is still left and they'll probably outperform the large cap and the broad indices. And there are some stocks which are run up and will be very volatile and in fact may not give returns comparable to the indices. So I think mid-cap will be is a heterogeneous sector in terms of valuations and performance. So you have to do a bottom-up stock picking in mid-cap. But if you do that, then I think there'll be good stocks still that can outperform the rest of the market.
Okay. Vibhav was telling us, Nirmal, that there are some chances that we could see a rate cut on the 2nd December policy. How hopeful are you?
I would say at least now, every day situation is changing. Brent coming to $75 was unthinkable. Even the politically and the things have improved. So I would say that there's a fair chance. I would say that at least 50 to 60% chance I would give is that rate cut would happen. I mean, it's logical. It's something which ought to happen, and I think governor will take cognizance of all the new developments that have happened.
Do you think the markets will take it very badly if the governor didn't cut, but sounded reasonably more positive on inflation being reined in?
I think there may be a small impact. Markets won't bother too much about it for two reasons. One is, there is very little transmission. So regardless of rate cut, interest rates are coming down. Deposit rates are coming down, lending rates coming down.
Yeah.
Now, what does rate cut, what will rate cut do? In fact, it reduces cost of government because government is the largest borrower. It also basically has an impact on the currency and the GSEC. So I think rate cut will have an impact, but more sentimental. So I don't think the negative impact of the rate cut doesn't happen will last too long. There are more compelling factors for the market, including crude oil prices, FI flows, and other things.
About a couple of weeks back, or rather about a week back, Nirmal, a lot of people believe that perhaps in the first part of the new year, we could be in for a correction. Given that things have changed overnight, are you getting a sense that any major correction is ruled out before the budget?
I see correction will happen. I mean, it can happen with any trigger. So I don't think correction is ruled out because if market has run up one way, it has to correct. So what it does is that even if it's a very flimsy or a lame excuse, market will take that to correct and again but that correction may be very short-lived. So correction, I mean, budget is still 2-3 months away. So there will be one correction, and the thing can be anything.
Fair point, Nirmal. We'll let you go at that. Thank you very much for joining us and participating in the moment for the market when all the indices are touching all-time highs.